Coming up on today's show, Rwanda extends tax breaks to manufacturing and construction sectors. Egypt launches 416 renewable energy projects worth 95.6 billion Egyptian pounds in 2 years. Plus, the European Union and China agree on historic investment pact after 7 years of negotiations. Hello and welcome to the program today. I am busy at Dubai, but let's start with the markets. And we'll begin with major markets we track here in Africa, which were mixed at intraday. Nigeria's main index surged 1.1%, while the GSC in South Africa was down 0.69%. Egypt's index ended the week negative on Thursday, while Kenya ended Thursday's session upbeat. And in the Middle East, the major markets are closed for the week, but then they closed negative on Thursday, except for Dubai's index, which was up 0.36%. On the flip side, the Abu Dhabi index was down 0.36%. Elsewhere in the region, the Qatari index lost 0.02%, while Saudi Arabia's index shed 0.1%. And in Europe, the market opened marginally lower today as British and European leaders strike pessimistic tones about the prospect of agreeing to a post-Brexit trade deal. Chelsea Delaney has more details on this and more. Good afternoon, Chelsea. The European Union and China have reportedly agreed on a historic investment pact after 7 years of negotiations. What will this new deal mean for the EU?
Well, European leaders will discuss this today and hopefully approve this deal that they seem to have reached with China. The main goal from Europe's perspective is to give European businesses, give European investors more and fair access to the Chinese market. We've heard numerous complaints over the past years about the unlevel playing field that European businesses face when trying to operate in China. There's a number of different practices that China employs for foreign companies versus their own domestic companies. This could include really hard regulatory barriers, as well as things like investment caps that limit the amount of foreign ownership that's allowed for certain industries. And on top of that, there's also a lot of state-owned enterprises in China that receive a lot of subsidies and a lot of cheap loans from the Chinese government. And Europe says that makes it very unfair for European companies that are trying to operate there. So China has agreed to take down some of these barriers to make its markets more fair, to even the playing field with European businesses. And this comes as we've seen really European companies come to depend even more than ever on the Chinese market. Through the pandemic, we've seen China become really the major source of growth for a lot of European businesses, for a lot of European industries. So this would certainly come at a welcome. It would be welcomed by a lot of European businesses.
Well, then it's a different case in the U.S. as the Trump administration is reportedly planning to add dozens of China's companies to a trade blacklist. Can you tell us more about this?
So the Trump administration has announced this new blacklist, and it includes dozens of Chinese companies that will be added and will face a much tougher business environment going forward. This also will include the top Chinese semiconductor manufacturer SMIC. That will be a big blow for SMIC because it won't be able to receive products from U.S. companies. So these supply chains are very integrated. What this blacklist means is that these companies can no longer really do business with American companies. That will really set off a lot of shockwaves through the semiconductor market, which is very connected to all parts of our lives now. And the U.S. is saying they're doing this because they believe these companies are linked in some way to the Chinese military. So as a chip manufacturer, SMIC says they don't have any link to the military, but the U.S. thinks that their chips are being used in military operations, and they don't want U.S. technology finding its way there. So this blacklist will effectively cut off some of those ties. And it also is the Trump administration's last blow aimed at China as it is going out. And we don't really know how the Biden administration will change its approach towards China.
And amid all of this trade talk, the EU and the UK are still divided over a Brexit agreement. Traders have been optimistic that a deal will be reached. Is that hope starting to fade?
There is a slight bit more of skepticism today, as we've heard a lot of negative comments from both European leaders. The EU's top trade negotiator has said that this is a grave hour and that there really are still some big outstanding issues. The UK's Boris Johnson has said that he sees a no deal exit as more likely now. And they only have really a few more days to seal this pact. The EU Parliament has said that a deal must be presented by this Sunday, so only a few days away. And we have seen the EU and the UK coming together on some issues such as level playing field provisions, but they do remain quite divided on the access that EU fisheries would have in British waters after the transition period expires. They haven't made much progress on that issue, and the EU is still very much sticking to their negotiating stance where they want EU fishers to have long-term access to that water. So that is a big stumbling block in these deals, but we are seeing investors still quite optimistic that they will be able to reach a deal. We've seen stocks in the UK rising to multi-month highs. We've seen the British pound at multi-year highs in the past couple of days. So there clearly is a big difference in the rhetoric we're seeing from politicians on how unlikely a deal is, and the optimism that we're still seeing in markets that shows that they still think a deal is coming.
All right, Chelsea, thank you for those updates. It's been a great week. To enjoy your weekend. All right, let's now head to the UK where all of this is happening. But then we'll be talking about the latest report from the Office for National Statistics showing that retail sales dropped 3.8% between October and November. Juliana Olayinka will be giving us details of all of that information. Good afternoon, Juliana. So UK retail sales went into reverse in November, and that's the first time in 6 months we're seeing that. Walk us through the report and the reasons for the decline.
Well, there's one main reason, Bissy, and that's because parts of England, well, in fact, the entirety of England was in a lockdown. We're in a 4-month lockdown in November, and despite the fact that we had these blistering Black Friday deals, which did bring in billions for the economy, it was all online, and the 30% increase that we saw in online sales during the month of November just wasn't enough to push up that retail sales data. So as you said, it dipped for the first time in 6 months to 3.8%. But according to the data released from the Office for National Statistics earlier this morning, retail sales are still way above what they were in pre-pandemic times, which is a good sign, but unfortunately not so great for clothing. Clothing is still declining, still struggling to get back to those glory days. And these are glory days that were commencing before COVID-19. Lots of major retailers have struggled over the past couple of weeks. We've seen a collapse of some of the big stalwarts like the Arcadia Group, which includes Topshop and other household names here, and Debenhams, the department store. I think what's given it an upsurge is food. During the lockdown, hospitality sector has been closed. Lots of people experimenting with all types of ingredients and household items. As people have been spending so much time at home, they've decided to give their backgrounds a little bit of a spruce. So it's not what was expected. But of course, if you're in a lockdown and the retail sector is closed, you're not going to expect retail sales to be booming.
So are we getting any form of reaction from the markets? What's driving investor sentiments at this time?
Well, investor sentiment is between here and across the pond with our American neighbours. Washington are trying to scramble to get this stimulus package signed and sealed so they can help boost the consumers and the economy, because, of course, they are really struggling under COVID-19. And as you were just discussing with Chelsea and Frankfurt, Brexit is still a topic of much discussion for investors. People are getting slightly nervous. Sterling was up at the early part of the week, but it's dropped significantly against the dollar now. It is all to play for. This time last week, when I was speaking to you in Chimazé, I was saying Sunday was the deadline. 7 days later, I'm still saying Sunday's the deadline. That's what the EU is saying. So it's going to be a long weekend for lawmakers across the world. Very quickly, the FTSE All-Share and the FTSE 100 both up at intraday by about 0.4%. The FTSE 250, the domestic market, the UK, just down by 0.07%. British pound is down on the US dollar by 0.49%, down on the euro by 0.37%, and down on the Japanese yen at intraday by 0.11%.
All right, finally, Juliana, let's talk about the Bank of England now, which has kept interest rates on hold at 0.1%. And that comes with a warning that rapid growth in coronavirus infections will deliver a bigger hit to the UK economy than expected in the final months of 2020. What else did the BOE warn about?
Well, yeah, as you said, the Bank of England Monetary Policy Committee, they met over 2 days on Wednesday and Thursday. And yes, their stance on fiscal stimulus didn't change, still at a historical low of 0.1%. Quantitative easing, record highs, but unchanged at about £895 billion. The Governor, Andrew Bailey, has been pretty vocal over the past couple of weeks, saying that he wants a deal. He expects a Brexit deal, that a deal between the EU and the UK is beneficial not just for Europe but for the British economy. He also went quite far in saying that he believes a no-deal Brexit will have far lasting consequences and damages for the British economy than any COVID disruptions. They did speak about COVID in their minutes. They welcomed the inoculation, which is currently ongoing. That's been going on for a couple of weeks now. Tens of thousands of people have been vaccinated by this Pfizer-BioNTech vaccine. But unfortunately, as we're seeing across the world, these infection rates are rapidly increasing. There have been talks at the moment of a third lockdown, which we're expecting in January. So even though the inoculation offsetted some of the contraction, the fact that we are going into perhaps another lockdown is cause for concern, especially because we had record-breaking 19.5% of a contraction in Q2, more than any other G7 or G8 nation. So there are concerns, but it's all to play for. We'll have to see whether or not Prime Minister Boris Johnson can get a deal. If he can't get a deal, then into 2021, we can certainly expect more fiscal stimulus from Britain's central bank.
All right, Juliana, we'll keep our fingers crossed and see how things play out in the end. Thank you, and do have a wonderful weekend.
Thank you, Basu.
And shares in Asia Pacific were mostly lower on Friday as investors reacted to developments from the Bank of Japan. In Japan, the Nikkei 225 dipped 0.16%, closing at 26,763.39, while the Topix index declined, ending its trading day fractionally higher at 1,793.2. South Korea's Kospi closed fractionally higher, while Hong Kong's Hang Seng index declined about 1% as at its final hour of trading. Mainland Chinese stocks edged higher. The Shanghai Composite was up 0.29%, and the Shenzhen component advanced 0.257%. Meanwhile, shares in Australia were down, with the S&P ASX 200 down 1.2%. And U.S. stocks index futures were lower in early morning trading today, and that came after the major averages closed at new highs. Futures contracts tied to the Dow fell as much as 79 points. S&P 500 futures and the Nasdaq 100 futures also both traded in mildly negative territory. The major averages were coming off a record-setting session, which saw all three indexes close at new highs. During regular trading hours, the Dow advanced 148 points for a gain of 0.49%. Well, let's talk oil prices now. They eased on Friday, that's today, but stayed within touching distance of 9-month highs hit yesterday as soaring COVID-19 cases weigh on fuel demand and as lawmakers in the U.S. battle over a $900 billion economic stimulus. Brent crude futures fell 0.5% to $51.24 a barrel, while US WTI crude futures were down 0.4%, trading at $48.19 a barrel. More than 73.65 million people have been reported to be infected by the coronavirus globally, and 1.65 million people have died. The spike in cases is leading to tough restrictions on travel, weighing on near-term fuel demand and market sentiment. We'll bring you more stories from across Africa when we return in just a moment. Do stay with us. Welcome back. The Rwandan government will roll out tax incentives for 2 years to help stimulate investments in the manufacturing and the construction sectors, as well as speed up business recovery from the COVID-19 effects. The relief, which begins in January, is under an initiative known as Manufacture and Build to Recover program, which was approved by the cabinet this week. The program is designed to significantly reduce the cost of setting up industries of select products, as well as existing firms who would like to expand their current operations. The incentives aim to increase the production of construction materials, agro-processing, as well as hygiene and sanitation products. Companies setting up industries or expanding operations in the above sectors will be exempted from import duty for materials and equipment bought for purposes of setting up the production plants. Egypt's Ministry of Planning and Economic Development says 416 projects have been established in the electricity and renewable energy sector, with a total investment cost estimated at 95.6 billion Egyptian pounds, while 194 projects worth 33.6 billion Egyptian pounds were completed at the end of the 2019-2020 fiscal year. On the geographical distribution of these projects, the minister notes that Cairo came at the top in terms of the number of projects, with about 60 projects, followed by Aswan with 36 projects, and then Asyut with 23 projects, and the Red Sea Governorate with 22 projects. The minister explains that Upper Egypt and the border governorates accounted for 37% of electricity sector projects during the 2 years. A total of 118 projects were implemented in Upper Egypt governorates at a cost of about 19 billion Egyptian pounds, and 35 others were launched in border governorates for 14.8 billion Egyptian pounds. The CEO of Kenya's biggest operator, Safaricom, has been talking about what the company is doing to protect its bottom line from the impact of the COVID-19 pandemic. Safaricom expects to be able to end coronavirus-related price cuts at its M-Pesa business at the end of the year. The company expects its core earnings to drop by 7.5 to 10.5% for the full year.
M-Pesa, which is used to send money, save, borrow, and make payments for goods and services, is one of the most popular modes of payment in Kenya. At the end of September, it had nearly 27 million active users in a population of 47 million. Safaricom, part owned by South Africa's Vodacom and Britain's Vodafone, removed all charges on small peer-to-peer transfers in March to facilitate cashless payment during the COVID-19 pandemic. The move was ordered by the central bank, which also directed commercial banks to remove charges on customers' cash transfers to mobile wallets until the end of the year.
Given the increase in volume that we have seen during this period within the ecosystem, and we see a very healthy ecosystem within the M-Pesa, is we are seeing whether we should not be looking at moderating the charges that we have around some of the tariffs that we have within, especially those below 1,000.
Safaricom's core first half earnings dropped by 10.5% year on year, hit by a 14.5% decline in M-Pesa revenue. Talks with the central bank are ongoing, Ndegwa said, adding that the company may yet cut prices for some M-Pesa services after volumes rose significantly during the pandemic. Safaricom has also been focusing on its data business to offset the M-Pesa revenue drop. offering 60,000 customers financing to buy 4G phones in an effort to boost usage.
At the end of this year, we will have 100% coverage. At the time when we announced results, we were at 91. That's one. The second is for you to really monetize data, you need handsets that can use data. And as you know, more than half of our handsets in the market are 2G handsets. So our intention is to migrate a lot of those 2G handset holders into 4G-enabled handsets. Today, the penetration is still below 20%.
Safaricom, which is bidding in a consortium with Vodafone and Vodacom for one of two mobile phone operator licenses on offer in Ethiopia, will hold 51% of the new operator if its bid is successful.
Years of conflict and the threat of al-Qaeda-linked Islamists battling to overthrow the government leave many Somalis dependent on aid. But the World Food Programme says an application called eShop has changed that dynamic. Let's see this report.
Muslima Abdurrahman, a Somali mother of 9, escaped death twice in the past 2 years while shopping for groceries in the city of Mogadishu, where Islamist insurgents regularly carry out suicide bombings on busy streets and markets. She traded the dangerous errand for online shopping earlier this year, thanks to the World Food Programme's Humanitarian e-commerce system in Somalia, part of its global shift from giving out food to cash. Originally conceived as a way to protect women in Somalia from security threats, be it bombings in the capital or harassment in a camp, it is also helping avoid large crowds at aid distribution sites during the COVID-19 pandemic.
It has become dangerous to go to the shops because we are afraid of catching the coronavirus. We are lucky to have this application. We enjoy online shopping. It also saves time and we get the food we want.
Her neighbor, Ilan Ado, who also uses the WFP app, says she uses the hours she saves to breastfeed her children, do chores, and rest.
I order food that I need for the day, such as rice or spaghetti. The delivery team brings the food to my house, and the shop owner withdraws the money from my card.
Though WFP launched eShop in 2018, it introduced home delivery in April, the month after COVID-19 hit Somalia.
The eShop is a system that, if it works in Somalia, it can work anywhere else. Somalia offers all the challenges that can actually be the testing ground for a system like this.
Hundreds of retailers sell on the app. Transactions are recorded to comply with the government tax system, and purchases are verified on delivery using biometrics.
Many years ago, when we were handing food, the people accept the food, and you could see in their body language how the dignity wasn't there. Because when you are receiving food, you are without having the opportunity of discuss or challenge, you don't have that strength. And you can see the body language of these beneficiaries have changed now tremendously. Because now with the cash-based assistance that we provide, they are the ones deciding where and what to buy.
$6 million in transactions and more than 51,000 deliveries have gone through the system. It operates in Mogadishu, including camps for people forced from their homes by violence, and in all Somalia's main towns.
And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.